So I think I'm good to go for the rest of the semester. Because if I skip the last assignment in strategic management, I did the math, I would still end up with the 77%. So it's almost impossible for me to fail that class. And then I calculated that if I got a 0 on the final exam for Intermediate Accounting 2, my grade in the class would be like a 71%, which I think is still passing. So I think it's pretty much impossible for me to fail the last two classes here. And I asked him about the reading assignments. He changed them all to 20 points instead of 200, but it didn't even affect my grade that much. It pushed it down from a 95% to an 87%. I thought it was going to be way worse, and then I did the math, and even without this assignment, my grade will still end up at a 77%. So, wow. That'd be hilarious if I skipped every individual paper except for one and still passed the class easily. That'd be insane. Because I literally skipped two. There were only 3 individual papers in the class, and I skipped 2 out of the 3. And then there's this last case analysis. I'm going to turn in something for it because that would just be really dumb to just settle for a 77%. But I'm good to go. I just have to hope for the government class. The government class is the biggest worry I have. That could be really bad. Well, oh, you know what? He said do not focus on the lesser perspective for the let's see. I mean, he said there'd be something on it. I don't know. He says the emphasis will be on the lessee with very little from the lesser perspective. You know what that means, folks. We're not studying the lesser perspective. Sorry, it's just how it has to be. It's right. We have 2 journal entry problems relating to deferred taxes, 2 journal entry problems relating to leasing, the lessee perspective, and complete 2 of the 3 sections of the cash flow statement. Oof. Cash flow might be the hardest chapter. Except for the fact that it's shorter, so I'm glad that it's a short, but it's going to be kind of hard. That's funny. The leases chapter was so long. Well, the PowerPoint presentation. So, well, here we go. Lesser perspective, we're going to skip that. Lesser perspective, we're just going to skip studying that and only study the lessee perspective. It only makes logical sense. Okay. Okay. Oof. Special lease accounting for issues. Oh, man. If it is probable that the expected residual value is equal to or greater than guaranteed, lessee should not include the guaranteed residual value in the computation of the lease liability. If the expected value is less than the guaranteed value, the difference should be included in the computation. Unguaranteed. Do not include an unguaranteed residual value in the computation. He says don't focus on the lesser perspective. Wonder why he focused on lessee perspective. I guess it's because most companies you work for you will be leasing stuff, but you will not be leasing. You will not be the lessor most of the time. Most of the time, the business will be leasing. What's the... Okay, whatever. Oops. Yeah, I might want to open up the PowerPoints for these ones. I don't know. Executory costs. Expense executory costs. So hilarious how I approached this class. I pretty much just paid attention in class, and then I waited till the day before the test and studied for it and got away with it. I literally did that for the first test that I got a 98%. How on earth did I manage to do that? That is completely lucky and like saved my whole semester. Man, I'm so worried about government. Man, governmental accounting. Gosh. That could be bad. That could be very bad. When am I gonna get those grades? I need to know how bad I did on those tests. Oh my gosh. The way, even with making the reading assignments worth 20 points instead of 200, The reading assignment still carried my grade in that class. Plus the fact that there were so many group projects. It was like a blessing in disguise that I had all those group projects. Because like a lot of my grade was like the work of my classmates. Oh my gosh. What if my classmates actually like what if my classmates um didn't give me full credit for the teams or team grades? That could hurt. That could hurt me. We'll have to see what happens there. But I have yet to suffer my grade. I have yet for a team project to result in me getting a bad grade because I didn't do anything for the project. Like I always do at least something for the projects, even if it's not really an appropriate portion. Like for one of our projects, I actually did a very large section, but that was the only one. One out of like 5 or 6 total. Let's adjust the right of use asset. I don't know what I'm looking at right now. Prepayments, lease incentives, and initial direct costs made before or at the start of the lease. Lease prepayments made. Whew. What if I did the math wrong in that case analysis? And then it turns out I can't just skip it. I really want to look at that thing and see how much I have to do. It's so funny how one of my advisors was saying this class was so incredibly hard, but I got lucky. Got very very lucky. That wasn't nearly as hard as that was. They made it out to be. Ooh. Whew. This is looking manageable. Oh, gosh. It's not like ridiculously long. It's just kind of long. I'm going to write at least, maybe what I'll do is just make sure I write at least one sentence for each part, which is not going to be that long. Oh my. Wonder how much I can get away with doing with not even citing anything. Like, I'm just going to read the case a bunch of times and then just probably wing it throughout the whole thing and not even look back at it very much. Like for our case analysis for McDonald's, all I did was I wrote strengths and weaknesses of operations. I made a tiny little adjustment for their problem thingy, and then I wrote literally just this part, this last paragraph here. That's all I did for our team case analysis. Man. Prepayments increase, incentive payments made by lessor to lessee reduce it, initial direct costs increase. Initial direct costs, commissions, legal fees, document preparation fees. Oh, seems complicated. We might have a multiple choice question about this or something. Initial direct costs are included in the Yeah, they do not increase the liability because you don't owe it, you already paid it, so that makes sense. That makes Righty. I have read through the PowerPoints for 2 out of the 3 chapters. That's actually pretty helpful. So, very short PowerPoint for chapter 23, but I feel like it's going to be more difficult to understand the concepts. That was funny. Man. I'm going to be so mad if I fail that government class. No. Man, I can't have been the worst in the class. There's no way I was the worst. I don't know though, because I really didn't study enough for those tests. I mean, like I heard that someone else who said they just studied the smart books as well. So, and everyone was talking about how they thought they may have gotten like a 40% on the first test. And I really, really hope he grades on a curve. But at the same time, what if one of the people in the class was just really, really good, and they pull up the curve all the way up? But even if the best person in the class gets like a 90% overall grade, that would still probably save me from failing. But we'll have to see. If as long as he grades the cities project on a completion basis, if he grades the cities project based on completion rather than based on whether you get the correct answers, then I'm probably still going to end up with like a 70 or 80% on it because I did not finish it. But I mean, 70 or 80% is really all I need, and I think it'd be fine. Very short point. That was funny. That was funny. That was funny. That case analysis is going to be so stinking fun. It's funny. Over. Can I just be done? I would like to be done. I would like to be done. That was funny. I want my grades in government. Gosh dang it. There's the operating activities, investing activities, and financing activities. Operating income statement transactions / working capital, current assets and current liabilities. Well, that's pretty simple. Income statement and current assets and current liabilities. That was funny. Investing, changes in investments and long-term asset items. Financing, activities, changes in long-term liabilities and stockholders' equity. Okay. Format of the cash flow statement. Oh no, I just realized we're gonna have to actually do a cash flow statement. Let's see here. It says you will have to complete 2 of the 3 sections. Also, he said we didn't have to do the direct method, so I'm going to ignore the direct method. Well, actually, direct method is still required for investing in financing activities, so dang it. But if it talks about the direct method in relation to operating activities, I will skip over that because he said that wouldn't be on the test. It says 2 or 3 sections of the cash flow. Well, crap. I gotta kind of remember what's going on the cash flow, although it's not that long. This doesn't even look that long. Cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. Then we have net increase, decrease in cash, cash at the beginning of the period, cash at the end of the period. And what's within the 3 sections? First, for operating activities, start with net income, then adjustments to reconcile net income to net cash provided/used by operating activities. And then you have the adjustments, list all the individual items, add it up to this number, and then this plus or minus this equals the net cash provided used by operating activities, cash flows from investing activities. It's much more simple. List of individual inflows and outflows, net cash provided or used by investing activities. Cash flows from financing activities, list of individual inflows and outflows, net cash provided used by financing activities. Net increase, decrease in cash, cash at the beginning of the period, cash at the end of the period. Step 1, determine the net cash flow from operations. Me is afraid. Me is afraid. Me is afraid. At least this will get improved slightly. This attendance thing is going to really help. Dude, that attendance was genius because I think it basically made everyone come to class every day so that they could get those free 30 points. Oh my goodness. That was a huge incentive to come to class every day, actually. Determine the net cash flow from operations. Determine revenues and expenses on a cash basis. Eliminate the effects of income statement transactions that do not result in an increase or decrease in cash. Convert net income to cash. Net cash flow from operating activities through either a direct method or an indirect method. I will not use the direct method. I will completely ignore the direct method for operations. Yay! Yippee! Yeah, this cash flow statements are so incredibly complicated. Well, they're not that complicated. Honestly, it's probably about as complicated as the thing I did for the government class, where I converted everything from the funds, or from modified accrual to full accrual. It's probably not that bad. You just kind of practice it a little bit to get used to it. But anyways, ignore direct method. Yay! Indirect method. Begin with accrual accounting net income, then adjust for non-cash transactions. Common adjustments include depreciation and amortization expense, gain or loss on disposition of assets and liabilities, because if you buy the asset and then sell the asset, the gain or loss is not necessarily cash. It's not cash. It doesn't represent cash. Amortization of bond premium and discount income reported using the equity method. Finally, adjust for changes in working capital accounts. Balance sheet changes in cash flow effects. I found this concept to be pretty intuitive because if you increase asset, usually you pay cash to increase your assets. So therefore, use cash when you increase the asset. If you purchase inventory, you increase the asset, you use cash to increase asset. An asset implies sources of cash. Well, okay, maybe this chapter isn't as hard as I was thinking. It's just that those T account analyses were so confusing. Please give me my grade in governmental accounting. Please. Please. I wonder how bad I'm going to do on this test. Well, it really all depends on how much I study. It's the direct correlation. The more I study, the better I'm going to do. One time I got a 50% on a final exam. And my grade in the class went from 97% to 80%. I can't believe. Oh, it's really close in this class. Because, like, if I got a 50% on this final, I would still end up with like an 80, something in the low 80s. And did I even do the math right for that? Like, I really hope I did. Man. It's. Balance sheet changes in cash flow effects. Increases in liability accounts. Simple sources of cash. Decrease in liability imply uses of cash. So that's pretty easy. And the effects for liabilities are also the exact same effects for changes in stockholders' equity accounts. adjustments to net income gain and loss. When assets are sold. Huh. You know, I wonder if it would be easier to do all those homework problems on like paper instead of on Excel, because I don't know. Okay, debt is redeemed. What are you talking about? Wait a minute. What do you mean debt is redeemed? Oh, how is this such a short PowerPoint? Because there's not really any examples. There's no example problems. I'm gonna have to go through those examples. Acquisition of assets by assuming liabilities or by issuing equity securities, exchanges of non-monetary assets, refinancing of long-term debt, conversion of debt or preference shares to ordinary shares, issuance of equity securities to retire debt. All right. Well, that was easy to read through the PowerPoint, but it's not really anything I didn't already remember from class. Like, it's gonna be more important to do the problems there. Please give me a grade. Let's see grades here. Man, I wonder how many problems I have to do. I don't have to do all the problems, but there's a lot. Maybe it's not as bad as I thought. Honestly, I thought chapter 23 had the least amount, but actually, it seems like it's pretty similar to the amount that's in chapter 21. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. That was a misconception. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. Maybe it would be easier to do cash flow anyway because the PowerPoint's so short. And also I could skip the direct method problems. Okay, I need to open the handout. Handout. Dang it. Dang, look at all those resumes. I applied for 2 internships and got nothing. No response. Awesome. Stop, 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 stop. That was funny. Where's the notes? Oh, I never downloaded it. No wonder. He didn't post it on there for a while after. Whereas I kept having to use the physical copy that I gave everyone instead of the virtual version. That was funny. I mean, I could use the physical copy instead, but it might be better to use the physical copy because honestly, actually, now that I think about it, that was a very smart idea because then I don't have to switch screens all the time. Well, usually what I do is I just copy and paste the thing into Excel, but actually I'm thinking maybe it was the best idea all along to just use the physical copy. It was just nice to not have to use physical paper. I could just do everything on my computer every class. Of course it's I am so lucky he decided not to assign a second memo. So lucky. And I still might fail anyways. That's funny. That's funny. I read off of a script for the presentation. Dude, he gave everyone full credit for their presentation. Everyone got a 50 out of 50. Everyone. I mean, nobody had any egregious errors I noticed when I was watching them give their presentations. I thought for sure he was going to take points off because I read off of a script. But nope. Chapter 23. That's right. Chapter 23 has notes, which is probably So what I'm actually going to do is I'm going to read through the solution for every problem and then try to do all the problems myself. Dang it. CA 23. What? Class activity 23.3 is not. Wait a minute. It's not even on here. Oh, that was probably at the end. Here it is. Yeah, we actually did. So it's in class. Oh, that is not good. Why do you make it so skinny? Damn. Well, either that or his only choice was either to make it the text very skinny or make it very small. Yeah, but it's not no different from any of these other ones. How did that happen anyways? So, let's see here. What are we doing? Cash inflow or outflow? Well, this one's pretty easy. You know what's funny? I never actually looked at the feedback on the previous test, and I never turned in the previous test for corrections. It was too easy. But let's check out this. Wait a minute. Wait a minute. Holy crap! I got 2 questions wrong on the first final, or the first exam. I got one of the conceptual multiple choice wrong, and I got 1 point off for the short answer. That was for my first test. Why does it start part 3? What the heck is this? Oh. Here's my 81 out of 100. What? 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 I don't know why he did this. He gave me a blank test that shows how many points I got off for each part. Why did he do that? Okay. Do I even feel like doing this problem? Depreciation expense will be added back to it. Good. Uncollectible accounts receivable. What do you do when you write off those things? It doesn't affect cash at all. It's a non-cash transaction. But for the bad debt expense, do you add back that because it's non-cash? Let me just see. Apparently, you don't care about bad debt expense. It doesn't mention it. Funny. Gain of 6,000. Subtract it from that net income, and then you calculate the amount of cash that you receive for it, and that would be investing activity. Gain subtracted from net income. Yay. Proceeds are shown as cash inflow. So let's see, 30,000 plus 6,000. Yes. Wait a minute. Well, it's just a loss. So isn't it just going to be added? It's like opposite. Add the loss to net income. Yep, I was correct. This is too easy. Purchased building and land. Well, obviously, $75,000 of cash would be for the investing, and then common stock would be non-cash, and mortgage note payable. Increase the liability to buy land, and non-cash financing and investing activities. Funny. Well, they received cash, right? Wait a minute. Okay. We are done with that question. Now we just have exercises and a problem. Oh boy. Which of the exercises involves the direct method? Well, unfortunately, it seems like these are all going to be... Oh, exercise 2313 is the direct method. But it still applies for the investing and financing activities. So I could just ignore the operating activities, just do the financing and investing and for that one. Number problem. Now there's part A for problem 23.8 is direct method, part B is indirect method. So I can't really skip any of these. Unfortunately, I can skip parts of 2 of them. So that's unfortunate. I want my grade. I might just keep refreshing my grades page. How much is that gonna help? I will notice whether this stays at 100 or this stays at 100 because it's almost certain to not stay at 100. But I did get lucky because the presentation gave me 100% on, which is very nice. But that's the class I needed at the least. I needed a boost in my governmental class. Dang it. It would be so ironic if I got an internship in a government, but I failed the governmental accounting class. Oh boy. Wow. Please give me my grade. Please. Please. Exercise 23-2. So, determine where they will show each of the items. This is like the same type of question that I had before. Okay. Plant assets that had cost $20,000 being depreciated on a straight line basis over 10 years. With no estimated scrap value were sold for $5,300. So you determine the gain or loss. The gain or loss will be either added to or subtracted from net income. And you will determine the amount of money that you received. And that will be included in investing. Oh boy. So the assets, you calculate depreciation, book value, sale proceeds. Oh, they already told you the sale proceeds. Therefore, you have a loss on the sale. So, loss will be added to net income in the operating activity. And the sale proceeds are reported in investing activities. Sale of plant assets. Oh, you know what? Man, I'm gonna have to memorize what the names of everything is. Loss on sale. Sale of plant assets. B. Issued common stock. Okay. The cash received in the issuance of common stock is finance. Sale of common stock, $130,000. C. Uncollectible amount accounts receivable were written off against allowance for doubtful accounts. I believe we do not do anything for that. Nothing is done for C. So you do not even include it. It's not even in a note. What the heck? Right. The company sustained a net loss of this. So you start with the net loss of $50,000. You add the depreciation, subtract the gain, and then the proceeds from sale of land is in investing. Oh, come on. You were supposed to say you add depreciation. Oh, next slide. Yep, so net loss, add depreciation, subtract gain, and then for investing, you have sale of land. Net loss Adjustments to reconcile net income to net cash used in operating activities. Depreciation expense. Gain on sale of land. So that was easy. E. 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 Purchased a U.S. Treasury bill. So, you have investing activities. Oh, that's a trick question. It says the company uses a cash and cash equivalent basis. They count a 3-month U.S. Treasury bill as a cash equivalent. Therefore, no change. Oh, jeez. F. Patent amortization. Add amortization in operating activities. Ooh. Company exchanged. Okay, I was really confused by this, the way they worded this. Exchange common stock for a certain percent interest in the company. So non-cash. Investing and financing. What the heck? Wait a minute. Yeah, because the common stock is financing, and then the interest in the company is investing. From the heck? Well, that's a note. That's a note. Okay. During the year, treasury stock costing $47,000. That would be considered financing activities. That was so easy. I don't even need to redo that one. Because these are not even problems. These are just like... That was funny. So we should finally get to a real question. Okay, 23-8. Please give me a grade. Please. Oh my gosh. How long have I been studying? 1 hour. I need to get to actual problems, though. That's the most important. Well, not necessarily the most important, but that's going to be a large section of the test, is doing the problems. Because... So, oh my gosh. We're just going to go through 1 through 8, determine what we're supposed to do for each one. Like, number 1, Ballard purchased 100 shares of treasury stock at a cost of $20 per share. Then they were resold. Oh, what do you do with that? What if you resell treasury stock? And I remember that if you get a gain on the reselling of treasury stock, it's not reported as a gain. It's reported as paid in capital, I believe. So, like, how do you report the paid in capital thing? Well, that's what we're going to find out. That was funny. Number 1. What? All it says... Wait. It's just going to go through the concepts first and then do the actual thing. Cash inflow from the issuance of treasury stock and outflow for the purchase. Obviously, sold investments. So we have a gain on the sale of investments. So the gain will be subtracted and the receiving money is in the investing. That's the same thing as if you had just... Okay. Revising its estimate for bad debts. What the heck? Do you just non-cash memo note at the bottom? Depreciation expense is added to net income. Easy. So, we determine the percentage of net income of Nirvana Company that we receive and then subtract it from the net income because of this. Seven. We received some dividends. 40% of 2,000 is the dividends that we received. It will actually count as investment income. Oh, what? Wait a minute. No, what? They say it's an operating statement. What? 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 They say that. I guess the reason is because it's if it's on the income statement, it automatically counts as being operating. Add dividends. Weird. Oh man. Yeah, but wait a minute. That doesn't make any sense. Okay, I don't think he's going to have a trick question like that on the test because for number 7, it would already be included in the net income, so that doesn't make any sense that you would add it again at the end. And I think he talked about that in class and said he wouldn't make it that confusing on the test. Stock dividend. Okay, so stock dividend is not non-cash. Not even shown on the statement of cash flows. What? Like, I don't understand which things are notes and which things are not notes. What the heck? Here we go. Alright, here are all the adjustments. Depreciation expense. Subtract the gain on the sale of investment. The decrease in accounts receivable. Okay. Decrease in accounts receivable. If you decrease the asset received cash. Income from equity method. Decrease that or subtract it, and then dividends. Yeah, this one was confusing. It doesn't make any sense because that should already be included in net income. But anyways, there you go. We have finished 23.8. We have not gotten a single question yet where we have to do T-account analysis. And that's the thing I really needed to do the most. And also, for this question, nope, this is not direct method again. Is it? What? Oh my gosh. We still haven't gotten a T-analysis question yet. Okay. I still don't understand how this is only going to decrease my grade by 10% overall. Did I do the math incorrectly somehow? Because I added 150 to this number, then did this number divided by this number. So that's 76.8%. Let me just make sure. 1220. The worst grade I can get in this class, according to math, is 77%. Rounded up. 77%. Dude. No way, dude. That exam really helped. That last exam where I got a 93 out of 100. Man, that was lucky. That was so lucky. My goodness. Literally another question that doesn't involve T-account analysis. Well, I'm glad there's not too many of them to do. Wow. Oh, you know what? I think I do have to do T-account analysis for this. Dang it. Payments for purchase of property, plant, and equipment. I'm going to take a look at this. I'm going to read through this and then I'm going to do it again, but without looking at it. So, T-account analysis. Wait just a minute. Like, you have to do T-account. Okay, so like, so I think the way you do it is you start with the beginning balance and the ending balance of equipment. Then you put in all of the applicable things that you do know, and then you plug it. You determine the plug figure to get the thing you do not know about. So the things that you know are that you sold equipment for $45,000. This is the thing you know you did. You sold it. Wait a minute. Okay, equipment costing $45,000 was sold for cash. So, you know that. And then there's one other thing. What the heck? Oh, and number 3, you have $20,000 increase in property, plant, and equipment and you issued bonds payable. So you have this number, this number, this number, and this number. All you have to do is figure out the missing number. That was funny. You take this plus this minus this minus this. That's a shortcut to figuring out the plug figure. Take the ending balance, add the credits, and subtract the debits to get the missing number. That's how you do it. That's a shortcut, because the way I was doing it was kind of weird. To get the missing number, take the ending balance and add the credits and subtract the debits, and you will figure out the missing number. And the missing number will be a positive value of 55,000. And if it's negative, it will be a credit. So let me just make sure. If it's positive, you will have a debit. So good. I wonder if I can do this next one myself. Well, I won't do it necessarily. I'll just talk it out and then see what the path is. So, proceeds from the sale of equipment. So, to determine the proceeds from the sale of equipment, it's actually kind of hard. Gosh dang it. You know, why couldn't they have just told you? Because you should have the original documentation of the sale of equipment. Okay, so all you know. Oh, I know. So you sold the equipment. Book value was $45,000. The gain on the sale of equipment was $14,500. Therefore, you add $14,500 to that number, and $59,500 is this proceeds from the sale of equipment. What? What? No. Who is that? Wait. What the? The reason was incorrect. Oh. Because you didn't factor in depreciation. Well, that sucks. You have to do a T account analysis of accumulated depreciation. Oh. Yeah, I just didn't calculate. So the book value was not $45,000. It was $45,000 minus the depreciation, and then you add the number to $14,500. So you would end up with $23,000 plus that is $37,500. So that's done. And to figure out the accumulated depreciation, take the beginning and ending balance, and then you have the number that you already know, $33,000 of depreciation. Then use a plug figure to get the remaining amount. And you do the ending balance plus minus the other two numbers. What the heck? Oh, it's opposite when it's a normal, when the beginning and ending balance are both credits. You do the opposite apparently. You actually do the beginning balance plus that subtracts the ending balance. What the heck? What the heck? Well, that's a weird. What if you did it the same as the other thing? No. When it's all on the credit side, do beginning balance, add the credits, and subtract the ending balance. Well, isn't that fun? Ooh, boy, oh, boy, oh, boy, oh, boy, oh, boy, oh. Okay. Now we have cash dividends paid. To get cash dividends paid, you have to, and cash dividends paid is going to be the financing activity. It's very simple. I remember doing this in class and figuring it out by myself. All you do is take the retained earnings. You have to do the retained earnings T account. You have beginning and ending balance, and then you wait a minute. And then you have net income. When you cancel net income, you debit net income and credit. Oh, wait, no. Wait. I'm so stupid. I don't remember how you do the closing entries. You just debit and you just cancel all of those accounts and it goes directly to retained earnings. But anyways, you credit retained earnings. Okay, so net income, add it to 91,000 and then subtract 104,000, and that's dividends. Beginning balance, add net income, but the ending balance is this, so you do this plus this plus this. Oh, nope, you do this plus this minus this. This plus this minus this equals this. Dividends declared. Ooh, redemption of bonds payable. Oh, man. Bonds payable. You take the beginning balance and the ending balance of bonds payable. And then you increase the bonds payable by 20,000 and then you figure out the plug figure, and that is going to be the redemption of bonds payable. So you take the beginning and ending balance. Oh no! Wait, we're not done with dividends yet? What? Oh, come on. Oh, come on. Oh, come on. We just did dividends declared before. Are you kidding me? Wait a minute. What is going on? Now we need to figure out dividends paid? Oh, come on. All we determined from this is the dividends declared. How do you determine the dividends paid? Liabilities. Dividends payable. Oh, there. Okay, so 5,000 beginning balance, 8,000 ending balance. Is there anything else you need to take into account? The dividends declared. Oh. Duh. Oh my gosh. You take into account beginning, ending balance, and dividends declared. And then you figure out the missing number. And to do that, you do 5,000 plus 8,000 minus 8,000. Dividends paid. Okay, so the T account stuff isn't so bad. It's not too bad. This is really not the worst thing on the planet. All the numbers you're figuring out are going to affect cash flow statement. All the numbers you're calculating are going to affect the cash flow statement. Dividends paid is going to affect finance. Redemption of bonds payable. I said we were going to take beginning and ending balance, add 20,000, figure out the missing number. Yes, that was exactly right. This plus this minus this equals the redeemed bonds payable. Boom. Oh! That's got to be a typo. One of these is a typo for sure. Financing activity. So that's D. Wow, we did it. That was fun. I didn't really do anything there, but maybe I could do the next question without looking at it because I know now how to do it. Unfortunately, I might not be doing so well in the first two chapters, so dang it. No. This is just one of 3 chapters I have to study. But this was definitely easy. The cash flow chapter is not really that hard. Snippy. We will not pay attention to the direct method. We are on 2313. We only have 3 left, but the one is very long. So dang it. Dang. We will completely ignore the direct method. So, oh, you know what? This is just the direct method. So we can ignore this question entirely and just do 2314. But unfortunately, that was one. Dude, it might use work from this. Okay, actually what we need to do... No, okay. So we really only have 2 problems left. But I should be good because I already studied a bunch of stuff. I should be good. I should be able to do stuff. Am I gonna write it down on paper here? I much prefer accounting class, financial accounting classes, to other classes. And unfortunately, cost accounting sounds like it's going to be more like management accounting, but management accounting is still better than other stuff. So, you just do the T account analysis first? Wait just a second. What if the T account analysis was only necessary for the direct method? I don't know. Maybe I should just read through the problem first. Wait, let me just look at this for a sec. No, we do T account analysis here. We did T account analysis for accumulated depreciation, copyright, cash proceeds from the sale, equipment. Here's the statement of cash flows. Okay, that's not that long. Huh. Wait. So the first thing we need to do, what we need to do is figure out the T accounts that need to be determined. So first, number one has dividends in the amount of this much were declared and paid. Okay. Okay, so we already did that before. First, you determine dividends payable. Dividends payable. There's no dividend payable on here? So therefore, you don't have to worry about it because it's already been paid. That will only affect financing. It will not affect anything else. Depreciation expense and amortization expense are included in operating expenses. Why would you need to do a T account analysis of accumulated depreciation? Oh, I see. Never mind. We only need to analyze one transaction, which is so weird, for operating section. And that is that equipment that had a cost of $20,000 was 70% depreciated and was sold during 2020. So all you have to do is determine book value of equipment that was sold. And I think I can just use a calculator to determine. Point 3 times 20,000. $6,000. And apparently you also need to determine the amount of depreciation expense. What? Wait a minute. Depreciation expense and amortization expense are included in operating expenses. it was sold, and gain on the sale of equipment, gain on sale is $2,000. So, therefore, cash proceeds equals $8,000. And also, and you need to do a T account analysis of equipment, because you have the beginning balance of equipment is $130,000. And you will have 4 numbers total. And the ending balance is $154,000. So, and the one other number you know is that you sold equipment that had a cost of $20,000. Credit the selling of equipment. So the missing number, you will do math. You will do 154,000 plus 20,000 minus 130,000, $44,000. Let me just double check. So this $44,000 is going to be purchasing equipment. So you purchased equipment for $44,000. So sale cash proceeds from the sale of equipment is this, and purchasing the sale of equipment was $44,000. And also accumulated depreciation was affected by the selling of the equipment. Depreciation, T account. How many things are there? How many transactions? Well, 4. There should be 4. Beginning balance of this is going to be 25,000. Ending balance is going to be 35,000. And the middle transaction is that you have 70% of 20,000. $14,000 of, and the only reason you have to do this is because it's not separated out in the income statement. Man. Yeah. $14,000. 14 So therefore, what you have to do is 35. Nope, you have to do 25 plus 14,000 minus 35,000, 4,000. Let me double check. What? Did I do that wrong? Come on. Wait, I did it. I'm stupid. You don't add 14,000. You don't add 14,000 because 14,000 was removed. You actually put it in this side, and then you determine 25,000 minus 14,000 minus 35,000 negative 24,000. So $24,000 is the missing one because there. So $24,000 was the change. So is that the number you need to take into account at the end of everything? Equipment. I think I did everything correctly here. I think that's all I needed to do for this before I start doing the actual cash flow statement. So there was the accumulated depreciation, there's the copyright. Oh man. How? Why do you need to do a copyright T analysis? Why? There is no extra information about copyrights. Why is that necessary? Why? What? Yeah, there's nothing there. You don't need to do that. I think I did it all correct. Wow! Accumulated depreciation. We have $24,000 depreciation expense. Copyright, that doesn't matter. I don't know why that's even there. We determined that the cash proceeds is $8,000. We determined for the equipment that we have an equipment purchase of $44,000. Now I should be able to do the statement of cash flows. Unfortunately, I don't have enough space on my paper, so I might have to get another piece of paper. Like, I wanted to do this here. I bet I'm going to do it wrong. No, I'll just look. Operating. The cash flows. We have this Breck. Oh my gosh. Statement of cash flows for the year ended December 31st, 2020. Cash flows from operating activities. Net income. Adjustments to reconcile net income to net cash provided by operating activity. Depreciation expense. Do I just look at the three circled numbers and that's it? Wait a minute. I look at this. So we go depreciation expense, amortization of copyright. Okay, so that's the reason why they wanted to do copyright stuff. Because if you that doesn't represent cash transaction for copyrights. Depreciation, amortization of copyright, gain on sale of equipment, decrease in inventories, increase. Do they? I hope they just go down in order of the income statement. They do it in a weird order. I will now attempt to do it by myself. Then depreciation is, we only determined that there would be $24,000 of depreciation. And then amortization is going to be $4,000. Gain is going to be I should have circled gain on the sale because that's important for the statement. I mean the cash flow statement. Ooh, you subtract gain of 2,000, and that's all you have because still. Oh my gosh! Wait a minute. 44,000. No, the 44,000 in purchase of equipment is actually not going to be in the operating section. So you're good. Now all you have to do is go through every operating statement item. So accounts receivable. The accounts receivable increased. An increase in asset equals decrease of cash. Therefore, negative 11,000. Next one, short-term investments is actually an investment. Inventory decreased. Therefore, you're going to have a gain of increase of 20,000. Prepaid rent is going to be an asset that increased. Therefore, subtract $1,000. Oops. Prepaid rent. And then equipment, accumulated depreciation. We already did the accumulated depreciation thingy. Copyrights, we already did that one. Then we do accounts payable. So what you do, if you increased your liability, therefore you increased cash, therefore increased by 6,000. If income taxes payable. Do you include income taxes payable? Because, okay, so that will be counted as an income statement. I think that counts. Income taxes payable was decreased. Therefore, you used cash. Therefore, minus $2,000. Okay. I used shortened titles for everything, so I'm probably just going to use the shortened titles on the test because I don't want to write out everything. Okay, so income taxes payable. I'm just using acronyms for everything. So salaries and wages payable. Salaries and wages payable went up. Therefore, you increased by 4,000. And then short-term loans payable. Short-term loans payable is going to be going down to that. Please tell me this is all right. You do not do long-term loans. Common stock. And also, I may have forgotten something. Nope, I didn't. Oh, that has to be everything, right? That has to be it. That seems like a lot of stuff. Oh, come on. What? Wait a minute. Wait. Okay, so depreciation expense 24,000. Amortization 4,000. Gain is negative 2,000. Inventories, salaries and wages payable is 4,000. Why is it in a random order? Accounts payable 6,000. Prepaid rent negative 1,000. Increase in accounts receivable. Decrease in income taxes payable. So what about short-term loans? Gosh dang it, what about short-term loans payable? What about that? I guess the reason is because if it's a loan, that counts as financing, so you don't include the short term. The short-term loans payable should be included in the financing. Yes, see, short-term loan. Short-term loan is in financing, so actually get rid of this. And I should have the correct answer after all of that. The only thing I got wrong was short-term loans payable goes into the financing. So, now you have the final number, which is going to be... This is why using Excel would have been nice here. $69,000. Please tell me it's right. Oh, well, I accidentally included net income in it, but it did turn out to be the right amount. Net cash provided by operating activities. Now we deal with the other two things. Which one is first, investing? The investing is going to be cash proceeds from the sale of equipment. Okay, so what's the first thing that they did? Yep, cash received from the sale of equipment is $8. Now I have to go through the whole entire thing. Oh wait, hold. Dividends is financing. So investments. Short-term debt investments. If you increase therefore decrease. $17,000. Please tell me that's the correct thing. Has to be. $17,000. And then equipment. Oh crap. I guess I already did the equipment. Oh, I guess the equipment should have been the first thing I did, but whatever. $44,000 buy equipment. $44,000. And then is that it? That seems very short. That is seriously it. My gosh. Sale of equipment 8,000. Purchase equipment 44. And then purchase investments. Net cash used. Negative 36, 40, 53,000. Net cash used by investing activity. And then the financing. Is it just that dividends were paid? Come on, they did it out of order. Why did they do it in a random order? I'd rather just do dividends first. Wait, was there supposed to be a T account for dividends? No. Wait, wasn't there supposed to be a T account for retained earnings? dividend's gonna just be 6,000. So I think that would have only been. That's funny. Fine. Short term. Do you just do both the short term and long term loans payable? So minus 2,000 and minus 9,000. Is that it? Is that it? Because there was no change in the other thing. That's literally two. Net cash used by financing activities would be 17,000, and then you have net decrease in cash. You take this minus this equals net decrease in cash equals that. Then you add the cash at the beginning to get the cash at the end, and that's that. And I finally finished the second to last question from cash flow statement chapter. Oh my gosh. That was funny. Now we have one more question, which is a long problem. No, it's too long. Equipment. depreciation of book value equals then you sold the equipment and loss on the sale was $3,000. So So the cash proceeds was $1,000. You have $1,000 of cash proceeds. You have loss of 3,000. So accumulated equipment beginning is 48,000. Ending was 70, and you sold equipment that had a cost of 10,000. So therefore you do 70 plus 10 minus 48 is 32,000 by equipment. So, and then you have accumulated depreciation beginning balance for equipment. Beginning balance is 14. Oh, come on. Ending is 21. So, and then you have depreciation expense of, or no, cancel the depreciation for 6,000. And then we have depreciation expense of $13,000 for just that, for that equipment. Common stock was issued. Do you have to do a T account for common stock? Yeah, you do. And do you have to do a T account for land? Oh my gosh. Oh my gosh. Oh. You have to do a T account for land and common stock. Oh jeez. Like, this is so much. Beginning and 40, and then increase the land from the common stock issuance. I think you might have to actually do the common stock T account first. Man. Oh, wait a minute. So, like, according to this, you assume you don't need the T account for land because you just assume that the increase in land is that one. Gosh dang it, man! $15,000. So common stock is 260. Ending is 310, and then you issued common stock of $25,000. And so then you must include a $25,000. Yet another $25,000. What? Wait a minute. Oh, that was funny. If you sold investments, you may have sold the investments for a gain or loss, so therefore you must calculate gain or loss on the sale of investments. Dude, it's so funny. Bought $5,000 of investments. You don't even need the T account because it went from 85 down to 50,000 and then went up to 55,000. So therefore, you bought investments for 5,000. So bought investments for 5,000. And then you need to determine the gain or loss on the sale. Because gain on the sale of investments is 15,000. You already determined. They already gave you that. You don't need to figure it out anyways. So, and that's all I need to do. So let's see. First thing is accumulate depreciation of 9,000. How did I do it wrong? What? Wait, for buildings. Why did I need to do buildings? Okay, I don't need to do buildings. I guess I just need to do it because it's part of the operating thing. Well, I will do it for buildings. For equipment, 13,000 here. Depreciation expense of for the buildings, and then the depreciation expense for the equipment, and then no. Oh, what? No. Why is it too complicated? You have to use net receivables. You can't. That's the key. Change it to net receivables first, and then do it, dude. Because take into account the allowance for doubtful accounts, and then do the net receivables. Investment purchase of 5,000. Equipment purchasing of 32,000. Proceeds from the sale of debt investments. Oh, come on! I keep forgetting all this stuff. If you sold investments, then you have the proceeds from the sale. That's gotta be a typo. It was supposed to be 15,000, not 10,000. So, sale of equipment proceeds. Well, at least I got that right. Dang it. Wait a minute. What's this whole thing with dividends? What? Oh no. The difference between this question and the other question is they didn't give you the amount. You had to figure it out yourself. How did I get the wrong amount for common stock? Oh, come on. What? Why did I use 25,000 instead of 15,000? Wait, why is 15,000 the amount used? Why? That's gotta be a mistake. How is it 15,000? Dude, I think I did this right in class. How did I not? What did I mess up here? I said 25,000, but the land increased by 15,000, not 25,000. This is ridiculous. Depreciation, gain and loss, and then all of those accounts. Investing, purchase of investments, purchase of equipment, sale of investments, sale of equipment, financing, payment of long-term notes payable. Cash dividends paid, issuance of common stock. Non-cash investing and financing, issuance of common stock for land. Okay, that's enough studying for that chapter. Now I have to study 2 more chapters. Funny. Makes logical sense to study chapter 21 because there's only 7 problems, just like how there were 7 problems for this one. I'm not completely clueless on the cash flow stuff, so we're good there. Completely clueless. That's funny. This is a weird thing. I don't know why I have 2 different things here. I have 2 handouts for chapter 21. Why is that? Exercise 2119. Exercise. Okay, I don't know what this is all about. Oh my gosh. He gave an example for exercise 2119 for some reason on here. Oh no. Why? Why is this a thing? He gave a whole explanation of how to do exercise 2119 on here. That's not fun. I don't want to do that. Oh. Exercise 21, 2. Oh yes, I can skip some questions because they have to do with lessor instead. Fun. I wonder how lucky I got on the 81% test as well. Because I really didn't study enough for that test. I did one problem in its entirety, and for the rest of the problems, I just read through the solutions. Oh no. Some of these require present value calculations, which we won't have to do. Five out of six is probably more than 75%. Yes, 83%. So why wouldn't it just start on? Now, why couldn't they have just made it the beginning of 2020? I don't know what an unguaranteed residual value is. The type of lease is, well, it only had to meet one of the requirements, and it already met the requirement because of 5 out of 6 years. But we will read the rest of it as well to see what other requirements it was. So first of all, lease term is 83 1/3%, and computation of present value of the lease payments. So the present value of the lease payments is 39,404. We don't need to do that on a test. We just need to. It will give us the present value of the lease payments, and then do that divided by what? The fair value? Wait, dang it. Wait. What? Wait a minute. It didn't give any more explanation. Oh, never mind, I'm dumb. Ooh, that was for part B, student. Yeah. So we won't have to do B on the test. It will just give us the present value of the lease payments. Prepare all necessary journal entries for this lease. So you record the right of use asset and the liability, then record the first payment, and then at the end of the year you have amortization expense, and then you do the payment combined with the interest expense that was accrued. Payment, interest expense is going to be that times that plug figures lease liability. Okay, I found it a very good method is read through the solution to a problem, and then that will help you with the next problem, and in which case you can do the problem yourself and see if you did it correctly. So we have finished one problem. Second problem is 21.6. And I don't think he even gave back my test. Okay, so he gave us the parts of the test where we could correct ourselves, which was all of the short answer questions. Oh my gosh, so not the multiple choice, literally every other part of the test. Okay, where's my actual test? Because he gave us our test back, didn't he? What? Why do I have the exam in my folder? I'm confused. Did he give us all back our exams? Oh, I know what this is. This is our first exam. That was fun. Oh my gosh. Oh my gosh. So yeah, I don't think he actually gave us back anything. I think I would have found it by now. Here's a chapter 14 quiz. Chapter 13 quiz. Yeah, I don't see it anywhere. He must have never handed back our first exam. I mean, our second exam. That's funny. Oh, look. I'm going to ignore the lesser perspective question because he said it's not going to be an emphasis on the test. We're just maximizing our study time here by only studying stuff that's going to be mostly on the test. So 21.6 is already done. Yay! Bargain purchase option. Lease term, economic life. Okay, doesn't pass the test. that test fair value of the asset. So we need to figure out the present value of the lease payments. Okay, we'll read the explanation here. A. Bargain purchase option thus meets the criteria to be classified as a finance lease. So, that's the only thing we need to know. But also, the present value of the rental payments plus the bargain purchase option exceeds 90% of the fair value of the assets. So, the 90% test, you have to do the present value of the rental payments plus the bargain purchase option exceeds 90% of the fair value of the assets. Wow. B. Okay, C, prepare lease amortization schedule. So we just used the 20,471.94, right? What the heck is all this? Hold on a second. What do we need to calculate? Why do we need to calculate stuff right now? Don't we just use the annual payment? Well, we actually have to calculate the liability. So the liability is going to be the present value of the lease payments. Is that what it is? The present value of the periodic rental payments is 88,000 something or other. So you actually have to add the present value of the bargain purchase option to the present value of the periodic rental payments equals the lease liability of $91,000. And that's also the number you use to do the 90% test. So that's my present value of the periodic rental payments, and then the present value of the bargain purchase option added together equals the lease liability. And then when you do the schedule, that each payment will be 20,471.94, and the lease liability will start as 91,000. So you have beginning 91,000, and the first year you just reduce it by that amount, and the second year you start to accrue interest. So you do this times this, and then you do this minus this equals this, and then this minus this equals this, and then all the way down to this. I wish. Oh, 4 months interest? What? That's what that is? 4 months interest. Wait, what? Wait, hold on a second. There's nothing here. Okay, this stinking thing is stupid. There's rounding errors. This is why Excel would be nice. He's not going to make us do this whole amortization schedule on the test. He's only going to make us do a few years. He doesn't ever make us go to all the way to the end of it, right? That would be so tedious to do this whole thing with pen and paper and calculator instead of doing it with Excel. Okay, I think I should be able to get the journal entries. So the first journal entry should be the fact we already calculated the lease liability is $91,000. The right of use asset is going to be $91,000. So is it going to be debit, right of use asset, $91,000, credit, lease liability, $91,000? Yes, I was correct. Then there's one more thing we need to do, which is the payment. The payment is going to be $20,471.94. So you will do credit, cash, debit, lease liability. Then, the end of the year 2020, you have to accrue how many months? I will calculate the number. So the end of 2020 must accrue interest expense. Which one do they do first, amortization or interest expense? They did interest expense first. The interest expense is going to be 7 months. No, 8 months. Because all of May, all of June, and then the rest of the 6 months. That's a total of 8 months. If you have 8 months of interest here, you do this number times 8 over 12. You will have 3,761.49 of interest expense. So instead of saying you actually do interest expense for this number and then lease liability for that number. Yay! 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 And then you do amortization. You do 91,000 divided by the number of years, 5, is 18,200, and you do amortization expense and right of use asset. Oh no! Oh, times 8 divided by 12. Oh, come on! Oh, come on! Oh, come on, man! How did I get the wrong answer? 10. They did it divided by 10, not divided by 5. What? Okay, so for amortization, you do not use the lease term, you use the economic life of the equipment. Multiplied by 8/12 equals that. Amortization expense. For the amortization expense divided by the economic life of the leased equipment and then multiplied by the amount of months that it is. Whew. Okay. The second year is going to be journal entry on the 1st of May of 2021. It's the same journal entries as before. Not quite. It's actually not going to be this number. It's going to be so I think you use 3 numbers for that journal entry, don't you? Do you do credit cash, debit the liability? Wait a minute. Maybe you just don't care about these 2 numbers. I don't know. Let me just look at it. No, you do care about the numbers. Interest expense for the number. Oh my gosh. Oh, this is so hard. Oh. Is this a typo? No. Is one of these things a plug figure? I think it is. Like, how are they getting this number? Okay, this is clearly a typo. This number right here is the typo. Or is it? Yeah, it is. 5642.24 times 4 divided by 12. Yeah, it was supposed to be 1,880. This number is wrong. This number is supposed to be here. Accrue 4 months of interest expense, the cash, and then the difference is the lease liability. So you don't, for this one, you can actually skip the calculation for lease liability. All you have to do is the cash, accrue 4 months of interest expense, and then the plug figure is lease liability. What's the next journal entry? The end of the year of 2021. Accrue another 6 months of interest expense. It's going to be the exact same entry as this. This entry is the same. It's going to be this exact same entry again, right? At the end of the year. Interest expense, lease liability for this number, and then amortization expense, right of use asset for this number. A what? What are we doing here? What are we doing? What are we doing right now? What about the end of the year? What is going on right now? Reversing entries? Oh my gosh. Man, that's so complicated. Are we going to have to do that on a test? This is actually a little bit more simple, honestly, because like you just use the 3 items from the amortization schedule. Maybe that's why they do it like this. This is more. This is much more simple. So they reversed this journal entry at the end. They did this entry at the end of the year, then they reversed this journal entry. Weirdly, you just reverse this journal entry, and then in May you just do the amortization schedule stuff, and there you go. I think that just makes the accounting simpler. That's why they do the reversing entry. But this isn't too bad either, because all you have to do is cash, accrue 4 months of interest, plug figure. This one, you do reverse the previous entry, and then use the amortization schedule for this entry. End of year should be the same as the end of year here. Interest expense, lease liability, or amortization expense, right of use asset. Oh, come on, how are the numbers different? You've got to be kidding me. Oh, man. Okay, the reason why they're different. So the reason this is different is because it's not the same interest every year. It's gonna be this full amount of interest. Wait, no. No, it's going to be this number times 8/12. This number times 8/12. And then this is going to be a full year of amortization instead of just 8 months of amortization. So that's the difference. Okay, we understand it. Exercise 21. Oh, look, another one with lessor entries. Let's go. We can skip it. Yay! Yay! We're skipping so many problems. Okay, number 20. Oh, I now understand why he gave us exercise 19, because it involves, it is needed for exercise 20. Still nothing. It is an absolute joke how I'm going to pass the strategic management class. I really don't have to go back through the entirety of exercise from 2019 because, my goodness, that's a lot. Ugh. Oh my gosh. What the heck is this? Dude, exercise 2120 is also the lesser perspective. What are you talking about? This makes no sense. What are they doing? I think I have to do 2119 instead of 2120. Dang. Because Kaluzniak is the lessor. So I think I need to be doing 2119, not 2120. I think this is messed up. So it looks like I'm going to have to do 2119, which looks like a piece of work. That looks like such a piece of work. Oh my gosh. You know what I'm going to do? I'm going to open up the textbook. Because the question is on one side and then there's parts of the answer on the other side of the same sheet of paper. I don't want to keep flipping back and forth. It's kind of funny how you could have no, I guess. Well, you can technically go through this whole class without reading the textbook. I really didn't read much of the textbook at all this whole class because I'm just relying on the lectures, the PowerPoints, and the problem solutions on the Canvas. That was funny. Exercise. Oh. Jeez, look at how long this is. I have the answer right here. It's literally a 2 full-page answer here. My goodness. My good. And it's all handwritten. That's wonderful. That's fun. Is this like a badly worded question? Because, like, what's the guaranteed residual value and what's the expected residual value? Well, it already told you it's an operating lease in the parentheses. Why would they do that? So, A, none of the classification tests are met, so not a financing lease. Dude, why is he right with like slanted capital letters? That is so weird. Why does he like to write in all capital letters? It's so funny. Oh my gosh. Well, gosh. He didn't do a rigorous test of the 90% test. He just eyeballed it. He's like, yeah, 1,137 times 3 is not going to equal 7,000. But that's not even. Oh, great. What is ROU asset? What is that column? I don't even know. I guess that's the. Oh, rate of fees. Okay, I need to know where you get the number 3165. I need to know where you get that. Like, it's not that the rental payments times 3, it's like the present value calculation or something. But he's going to give us the number. That's funny. Okay, so for finance lease, you record interest expense and you record amortization expense. For the operating lease, you record lease expense. How do you calculate lease expense? It's just the payment that's due tomorrow. What the heck? What the heck? What? Do you just do straight line depreciation one third of what, 3165? No. What the heck? Come on, where'd you get that number? I seriously don't get where the numbers are coming from. Oh, it came from reduction of lease liability. Epic fail. All you do is use the amortizations table to calculate your numbers. In this case. So, you know what? That's much better. I want my grades. Oh my. Second lease payment. End of year. Record lease expense. Just do the stuff on the amortization schedule. Yet again. Amortization schedule is your friend. That was funny. Final lease payment. End of year. Record lease expense. Yes, because you have to pay at the beginning of the year. Interestingly, he didn't do C or D. He just did A and B. for that one. Okay. Well, that was fun. Please tell me that I don't know how to do this. $21. Oh man, that's a good point. Accounting for an operating lease. Oh. Four divided by 6. Not quite 75%. Fair value of $25,000. Okay, we will finally get our way to calculate the lease liability, but I think if it involves present value, he might just give it to us on the test, so it might be fine. But like for certain tests, like the 90% test, you have to like take into account the residual value or something. Gosh dang everything. Well, hopefully this example will tell me how to do that. So it will show me the 90%. Right. So how did they get the 90% test calculation? Because we kind of need to do that. We need to like prove, because we need to prove that it's an operating lease. So they got 18,214. Well, he's gonna give us the present value of the lease payments, and also it apparently doesn't involve. It apparently does not involve the guaranteed. Well, it says not guaranteed. There's no guaranteed value. So, man, that's gonna be confused. So 90% test, he's just gonna give us the 18,214. We divide that by 20, the fair value to get to see if it's more than 90%. If it's not, therefore it's not an operating, or doesn't meet the requirement for a finance lease. And if it doesn't meet any other requirement, then it's an operating lease. Oh my gosh. Next question. Prepare the lease amortization schedule. You use the present value of the lease payments. Do you use the $18,214? Do you do anything with the residual value? No, not yet. But maybe in the last question we will do something with it. So you take the 18,214 and you amortize it, and the payments are going to be 4,892. And first year, second year, we'll have interest. Please be right. That's the correct number and number there. So it's very easy to do the amortization schedule. The first payment, you just do that number, then you do this number times the interest percent is this minus this is this minus this is this. Continue throughout the whole process, except for this last one, of course, is always dumb. It's always dumb. Because 4659 times 0.05 is 232.95. Okay. Well, that time it did work, but that's funny. So, B is easy. Prepare the journal entries for Donahue for 2020 and 2021. First of all, you do lease or right of use asset 18,214, lease liability 18,214. And the second journal entry is going to be the payment of 4,892. You do cash or lease liability cash. The next journal entry is the end of the year 2020. At the end of 2020, you will do these three numbers. It will be very easy. You just have to do lease expense of this, debit lease liability. Wait. Oh, come on. Wait a minute. No, credit lease liability. Credit lease liability, and then credit the right of use asset for this number. Yes, I was right. That's that. So then you're going to do the entry for January 1st, 2021 will be the payment, and it'll just be lease liability cash. And then at the end of 2021, you will do these three numbers. The lease expense, credit the lease liability, credit right of use asset. Yippee! Is that everything? Yay! I'm getting it. That was funny. Now we will determine. Suppose they incur direct costs. Well, initial direct costs would add to the right of use asset, but it would not add to the lease liability. Yes. The right of use asset will be different. Right of use asset. Holy crap. Well, so that's going to change everything. Huh. What the heck? Oh my gosh. Oh, please don't tell me we have to do this on the test. Oh my gosh. Lease expense for every year is going to be equal to the original number plus the additional cost divided by 4. Nice rounding error. Nice. Carrying value. Yep, just do the whole thing all the way down. Oh my gosh. So instead of the original journal entry was just right of use asset, lease liability, this time the lease liability will be the same, but the right of use asset would here, and the difference is cash because you paid cash for that initial cost. Then you make your initial payment, and at the end of the year, it's different. The expense will be higher than the one you had before, and you will be using the numbers from this amortization schedule here for all the journal entries. Oh my gosh. Okay, so we would have a guaranteed residual value of 8,000 something. The expected value is 9,000. Okay. E lead to a finance lease for the company. Why is it a finance lease? Ah! What? Why would this end up as a finance lease? What the heck? Well, this is so confusing. Why? Why? Dude, oh. Oh, okay, here. We should probably look at this. Oh, some of the lease payments and any lessee residual value guarantee. So you would add that guarantee to the present value, and then it would exceed 25,000. So because you would have 9,000, or would you add 8,250? I don't know. Would you add 8,250 or would you add 9,000? So I think you'd add 8,250 to this, and it goes over 90%. Well, that would clearly go over it. So, therefore, it would end up as a finance lease because you add the guarantee. Wait a minute. Well, yeah, that was not a very good explanation. He should have explained why it's a finance lease. Explain how a bargain renewal option for 1 extra year will all just be changed to a finance lease. That's it, right? Gosh dang, of course it has to be overcomplicated. Oh, come on. What? I thought it would just automatically make it a finance lease. Well, it's a renewal option for 1 extra year, and the 1 extra year would cause it to be 5 out of 6. Therefore, it's a finance lease. The present value of the bargain renewal option must be included in the initial measurement of the lease liability. Good. Okay. And we only have one left. And it's going to be problem 21. Seven slides. It says finance lease in the parentheses. Hilarious. Residual value, expected value. Therefore, there's 5,000 additional liability. Or no, it's 5,000, but the present value of the 5,000 is added to it. Of course. Oh, jeez. 6 out of 6, so it qualifies already. Fair value. We don't even need to do all the tests because we can already see 6 out of 6. Fair value of the asset. Present value of the lease payments plus the... Is there a guaranteed... Guaranteed... You add the guaranteed residual value. Do you also add the difference? I don't know. I'll have to look at that. Guessing. Lessor's implicit rate, lessee's incremental borrowing rate, will revert to the lessor at the end of the lease term. Use a straight line amortization for all leased equipment. Okay. Right. Present value test. Let's look at this present value test. We have the present value of the periodic rental payments plus the present value of the guaranteed residual value. So equals the total present value of the lease payments. Okay. You don't do anything with the 5,000 right there. But afterwards you add the 5,000, or no, you add... Do you take the present value of the rental payments and then you add the present value, the difference between... Okay, let's see. So, present value of the periodic rental payments plus the present value of the amount expected to be owed. So the present value of the 5,000. So, yeah, I was exactly correct. right? So equals this. And then you start the schedule with this and go down. Ooh, lots of years. 6 years. 6 years. And watch as there is a rounding error there. I just want to keep doing this. I keep getting. So, right. It's a finance lease. It's not very simple. It's interesting. The operating lease is much simpler to account for. So, the first journal entry is this number, lease liability. I mean, right of use asset, lease liability. Oh no. Oh no. Please be right. Thank goodness. Oh, okay. Second journal entry is 1313864, lease liability, cash. And then at the end of the year, you have a full year of interest and a full year of amortization. The interest is going to be this 362622 interest expense and lease liability. And then you have the 571,641 divided by 6. Equals 95,273.5 amortization expense right of use asset. Yippee. Yippee! It's not complicated because he made one of them complicated because it was in the middle of the year. But this is not complicated at all. It should be pretty much the same type of stuff for the next two. It's going to be this payment at the beginning of the year. And then it's going to be the end of the year. The interest expense will be $30,443, and this thing will be the same. This is the same, and this is the 30,000 something or other. And that was easy. Ooh. Right? That's it. All right, now C. Lease incentive. You would subtract $5,000 from something. Okay, so let's see. What do you do with the $5,000 lease incentive? You subtract it from something. All right, we'll just look and see what the answer is. Oh, okay, so the lease liability will stay the same. The right of use asset will be changed. I think that's how you deal with it for both things. Ooh, wait. Yes, for both of the situations, you will change the right of use asset, but will you not change the lease liability? Right of use asset will be measured at the original number minus 5,000. What if the man's prepaid rent of $5,000? The heck? What does that mean? Wait, hold on a sec. This is like the opposite. What is this? What advanced prepaid rent of $5,000 to follow? Well, I just have to hope my nose does not run tomorrow. It only is allowed to run today, not during the test. But I guess I'll have to bring my box of tissues with me inside. That was this one. So prepaid rent is increased right of use assets. Oh. So in this case, you increase the right of use asset. In the other case, you decrease it. That's fine. And boom. We have gone through every problem relating to leases. And we completely ignored the lessor side of things. So there you go, folks. Oh. Okay. Well, I guess we can. It seems like we're going at a very good rate because it only took like 2 hours to do each chapter. So theoretically, I should be able to do this one in 2 hours. Wow. Even though there's way more problems. Ah, jeez. Well, We can get through a lot of chapter 19. I didn't even use this paper the whole time. Good. Chapter 19. We have way more problems to get through, but maybe they'll be simpler problems. So, exercise 19.1. Let's check the thing again and see if there's any directions for this. Couple of thoughts. Two journal entry problems relating to deferred taxes. Leasing, emphasis is on lessee perspective. Complete 2 of the 3 sections on the cash flow statement. So, there. This way. Can I get through chapter 19? Can I? It was easier to get through the other chapters, chapter 21, because I was able to skip like 2 or 3 of the problems. Oh, man. Well, time to blow notes. That was funny. Have fun listening to me blow my nose. Ooh, funny. Funny, 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 funny. Funny. Okay. Oh, this is confusing. Oh, this is confusing. Okay, so the whole difference is $180,000. So the temporary difference is $180,000 and its future taxable amounts. What's a future taxable amount? A future taxable amount is a future tax. Therefore, it's going to be a liability of a that was fun. Okay, that was funny.